Alrighty, guys. So today I'm gonna be doing a nice little free class for everybody. And I'm gonna be actually going over how I use my SMAs and Confluence with my support and resistance in order to actually get a better entry and be more, secure and safe in my trade. I want to feel good when I'm in my trade. So guess what? Um, at the end of the day, when I use these SMAs in my favor, I feel more secure within my trades. So let me explain to you guys. So the 8 SMA is actually the 8 simple moving average, which means it's a simple moving average of the last 8 candles to form. So every 8 candles you get an SMA. The 50, same thing. It's every 50 candles. So it's the average of those 50 candles, the average of those 8 candles. So if, for example, let's say we're going bullish in the last 50 candles, right? Like we're pushing more bullish than bears, then at that point price will be above the 50 SMA and so forth with the 8 SMA as well. So how I like to use my SMAs is that I like to use it as a psychological level of support and resistance. Now, mind you guys, this is not a way to strictly trade, right? This is just a confluence and something to keep you, feeling good about yourself, feeling good about your trade, feeling good that you are in a good position, right? So as you guys can see, the 8 SMA usually trails the candles very, very, very closely. And the 50 is our stronger level of support resistance. So most of the times, right, when we break our 8 SMA, most likely we are going to come down to our 50 SMA and then actually reject it, right? If we do end up breaking that 50 SMA, then most likely what you are going to get is a structure flip on the higher time frame. So like 30-minute, 1 hour, 4 hour daily, you are actually going to get a structure flip most likely if we do close below those SMAs. So you got to be very aware of whenever you're in a trade. Let's say, for example, you got into buys right here, right? And price, kept going through the SMAs. Everything was looking good, and then price closed below this 8 SMA. So at this point, once price closes below the 8 SMA, you're like, hey, there's a possibility that we're most likely going to come down to the 50. But if we break that 50 SMA at that point, most likely you are going to get broke even, or there's going to be a structure flip, right? A tide shift in the market. Now, you want to be very aware of these points whenever it happens, because a lot of the times it can indicate a huge move coming, right? So let's go to when the tides actually shifted, like for example over here, right? So as you guys can see, price actually kept following the SMA, right? Trading above it, it closed below it sometimes, but it still held the 50. Right, the second that it closed below the 50, we were getting to a psychological level of support and resistance, or we were just getting to low support and resistance, which in this case was also a fib long. So I like to use this as a confluence to actually get into my entries, right? So boom, I have the fib long, then I have my support and resistance right here, and then I have a closure above the 8 SMA. That is my favorite actual entry to actually take when I do want to get into the market. Reasons being, I have a high probability of winning because of the fact that we are actually trading bullish above the SMAs. We're forming support at a strong level of support or resistance reversal zone, right? And guess what? We also have our fib and confluence. Our fib is, is like a little baby. So price kept, holding that SMAs after closing above right here and doing this fib, right? We always have to have healthy retracements after we have a huge move. So we have this huge swing from this low to this high. And then price, had to retrace. We do have to have healthy corrections in the market in order for market to continue to move. It can't just move straight up or straight down, right? So as long as price was trading above these SMAs, we were Gucci. But look, as you guys can see right here, price closed below this 8 SMA and then had a rejection to the 50. A lot of the times, this is why you can't actually just trade strictly off SMAs, because look, you got a bullish candle confirmation right there after rejecting the 50 SMA, and most likely that was a bullish engulfing candle in the 15-minute. But guess what? You can't rely just on the SMAs. You got to have that as a confluence. So price actually on the next candle did end up stopping out all the buyers that had stop loss below here, and continued to push down, started trading below the 8 SMA and the 50 SMA until it did a nice little healthy correction. Like I said, the market has to move with the fibs and with corrections in order for it to be a healthy market. So price actually did go all the way up to the 764, which is a 76% rejection correction. So imagine the fib levels mean that you are correcting a certain percentage of the swing. So from this swing high to this swing low, we actually retraced or corrected 76% of the move. What does that tell you? That tells you that it's not really a strong trend. You know what I'm saying? So at this point, yes, you could have taken your sells over here, but you know, you want to be safe, right? Because at this point, price low key, right? Low key, if you're really reading market structure, is making new higher highs and higher lows. As you guys can see right here, price made a new low, then it made a lower high, but then guess what? It made lows right here. And when it made lows right here, we had equal lows, and then price broke new highs. So guess what? Now we're getting a new high. And with that bullish closing right here, you know, most people would think that that's a higher low being formed in order for price to actually continue to move up. But since we closed below the 8 SMA, you know, you don't want to be really wanting to get into those type of trades, right? So price ended up eventually closing below the 50 SMA and the 8 SMA with a huge aggressive cross. So when price crosses like this, it means that usually a big move is going to come, right? Like you guys see this cross right here, how the 8 SMA follow the candles and the 50 SMA just stayed in the middle. This is most likely going to happen when you're going to get a retracement, right? Now the retracement happened to the upside to continue to move down. However, it can do the same thing to continue to move up, right? So it could have came to this 50 SMA, formed actual support and resistance, a level of support and resistance, if this was a significant level, which it wasn't, right? If not, it would be marked out. And then from that point, you know, you have your support and resistance, you have your SMAs in your favor, and then potentially you would have had a fib, right? So if you guys can see right here, this is actually a fake out of the fib. So a lot of the times, like I said, fibs, SMAs, all those things, you know, they're just Confluence. We're trading support and resistance. But look at how the 50 SMA is right there, right next to the 618 and 50, right? A lot of people would have seen that support form and would have actually taken buys, and they would have gone clapped, right? Now, the reason being that they got clapped was because guess what? This wasn't an important level. This wasn't a very key level. The key level was down here, and we actually rejected this level 2 times after coming down. You know, the third time most likely it's going to break. So price ended up closing below the 8 SMA and the 50 SMA, and it was riding the 8 SMA all the way down to this next zone. As soon as we got to this next zone, you know, 151, 800, strong level, 800 level is a psychological level of support and resistance, right? We faked out the sellers right here, right? A lot of people thought that most likely it was going to continue to sell off, but we faked out the sellers, closed bullish above, and then we had resistance form, right? That little bearish candle, that means that we formed a minor level support and resistance. So when we actually did close bullish right here, we made resistance, but guess what? Then we made support after. And right after that support was formed, boom, huge rocket candle, right? So you had a fake out of support and resistance, and then you had a solid closure with the support and resistance, and then you had your move. So that was the move that happened, right? Now that, in my opinion, that would have been a counter trend trade. Right now, I potentially would have taken that trade just because I like to trade fake outs when they happen. So, like for example, if I see this fake out happening and I see this bullish candle come close right above, I will get in this candle. Right. The reason being, if the sellers just got faked out of the market, what does that mean? It means that it's buys now at this point, right? So basically, the buys would have been there and your stop loss below these lows, because then if we actually broke these lows, then we would be making lower highs and lower lows. So then at that point, you know, we're bearish. There's no reason for you to buy. And we would have came back down below this level of support and resistance at 151, 800, which would have been, you know, telling you like, hey, it's not a fake out. It's actually going to continue to go down. But then eventually we did come fake out again. Boom. Bought all the way back to 152, 500. Another strong level of support and resistance. Mind you, 500 levels. When you're trading above 500, you want to be looking for buys. When you're trading below 500, you want to be looking for sells, right? So let's say we're like at 152, 500, and we go to 152, 600. You know, that means that most likely we are going to go to 153. But if we're trading at 152, 500, and we go to 152, 400, most likely we're going to come back down to 152. You know what I'm saying, guys? So psychological levels of support and resistance like SMAs are used in your favor in that way as well. So then price, excuse me, then price, you know, started consolidating a little bit. You know, we had this actual range that formed right here, and we didn't break out of this range until we actually did come to this level. And as you guys can see, we had a nice clean break and retest. So this is why I do not take impulse trades, right? Price came, right? A lot of people got into sells after price broke these lows. And these lows as well, people got into sells. and then they got stopped out instantly because of the fact that they didn't wait for a break and a retest. So I like to wait for a break and a retest if I'm breaking zones because of that specific fact, right? Because if we're holding that zone, then it gives me a level to, you know, have my stop loss above or below it. It's very, very, very nice to have that. Like, for example, we have faked out this level, took buys above the 8 SMA after closing this, and then boom, rode it all the way up. Stop loss below here because if these lows were broken, at that point, you know, your trade is invalid. But, you know, price continued to push up after the fake out. So a lot of things about fake outs, guys. You got to think about it like this. You're either buying or you're selling in the market. There's no in the middle, right? There's no in the middle. So it's either buys or it sells. So guess what? If it just faked out the sellers, psychologically, guess what? It's buys. Simple, just like that, just off the rip like that. If it just faked out the sellers, it's buys. If it faked out the buyers, it sells. Because if it's not one, it's the other. So very, very, very important, guys. Besides that, you know, we did have price actually did close below this level support and resistance. Then you have your break and a retest, and then you have your bearish engulfing candle. This is another candle confirmation. You know, now we're trading below the SMA, so we're very, very nice, right? So, you know, you could have taken your sell right here, stop loss, probably like above here. You know, you got to give it a little bit of space because you could have gone with a touch to 50 SMA. So what I like to do, right, if I would have gone into sells right here after this bearish engulfing candle, what I would have liked to have done is that I would have liked to actually put my stop loss above the 50 SMA, right? And if not, you know, above the 8 SMA at least, because these are psychological levels of support and resistance that you can use in your favor to actually have a better stop loss. So if I have my stop loss below or above my SMAs, then at that point, I know that price can potentially come touch the SMAs and then actually reverse and go my favor. And guess what? I just got saved from getting stopped out because, you know, I was smart and I put it below or above the SMAs. So it's very, very key. Also, you got to be aware that the 8 SMA on the 15-minute is the 50 SMA on the 1 hour. And so forth with other timeframes. I don't know exactly which timeframes correlate with each other with the SMAs, but they do, right? So the same level that you'll have as the SMA on the 15-minute, you'll have it on the 1 hour on the 50 SMA, if that makes sense to you. What else? So, you know, price closed below the 8 SMA and the 50 SMA, very aggressive cross as well. You know, not like this one. You see how this one, the 50 SMA just stayed moving, you know, in a straight line. Not like how this one, wham, it started dropping. It's gonna tell you like, hey, there's a potential big move coming. Because at this point, when we have this cross, you have this bearish candle, this bearish engulfing candle after breaking a retest, this strong level of support and resistance that we faked out multiple times. Right, we faked it out multiple times, and then for the third time, it did the break and the retest. So now we have that break and retest. Boom, you're golden to get in that because guess what? You're trading below the SMAs. You have your level support and resistance. You have your candle confirmations, and you have your break and retest. So you have 4 confirmations right there just to get in. So 4 confirmations for me, you know, that's a solid trade. That's a trade that I'll take any day, and every day I'll take that trade. And, you know, this trade actually did end up, you know, bleeding until, as you guys can see, price actually started coming back above the SMAs. So when you guys see this right here, right now at this point, you see that price is closing above the SMAs. So you're like, hey, this is your time to get out, right? So if you took sells over here and you see this price, super strong bullish candle closing above the 50 on the 8 SMA off one candle, and the SMAs had already crossed over here, you really want to get out of that trade if you're in sells because most likely what it's going to do is that it's going to correct this whole move right back up to the upside just like it did. Wham. And guess what? Just like how the 8 SMA followed it going down, the 8 SMA is going to follow it going right back up. Very, very simple. It's a very simple concept, but it's a little bit more advanced because a lot of people, what happens is that they tend to use these SMAs strictly just to get into their trades, right? So they see a rejection of the SMA, boom, they get into the trade. You never want to do that. You always want to make sure that you get your candle confirmations, you get your confluences, and then you use that in your favor to actually feel good about your trade, right? So as long as price keep trading above the 8 SMA and the 50 SMA, you know, you're happy in your buys, right? But then guess what? Price over here started closing below the 8 and the 50 SMA as well as over here. And, you know, we started getting drops. And like, as you guys can see, the 8 SMA follows. So as long as, you know, you're holding that 8 SMA, you're okay. Once you break that 8 SMA, then you're like, okay, something might happen. right? And then if you break that 50 SMA, most likely you want to get out of that trade, because at that point, there's a potential reversal happening. Very, very, very key, guys. Very, very key. And you guys can see, look, it'll follow the 8 SMA. Boom, boom, boom. Come retest the 50 right here. And as long as it's still holding the 8 SMA and the 50 SMA, it'll continue to go up. But once it starts closing below it and you start getting more bearish candles, there's most likely going to be a drop that happens. And that's what you want to be aware of. So you always want to use these levels as psychological levels, support and resistance, and you guys want to make sure that they're in your favors. So here are my SMA settings for you guys. The actual guy that makes it is called Stock in a Box. So I have the 8 and the 50 SMA right here. I used to use the 20 SMA, but what tended to happen is that pretty much the 20 SMA would be in between these. So it would just be riding in the middle. Yes, it would be in my favor sometimes, and I did like it, but it just ended up adding a lot of clutter. And the really important ones are the 8 and the 50, in my opinion. The 20, I used it a little bit more for swing trading, just because remember, this is a moving average of 8 candles, a moving average of 20 candles, a moving average of 50 candles. So if you're in a swing trade and 20 candles pass and you're seeing that price is starting to close below the 20 SMA, then at that point you want to most likely get out. So nice little class for today, guys. It wasn't going to be a long one. I just wanted to explain to you guys how I actually use these SMAs in my favor to trade. Right here you go, the settings, brother. So this is something that I use in my trading every single day. I have learned to master the SMAs and use them in my favor, right? When I'm winning a trade, and guess what? When I'm losing a trade, most likely it's because the SMAs weren't in my favor. So I'll go back and I'll be like, damn, I lost this trade because I wasn't paying attention, and guess what? My price was trading below the SMAs. So I'll be aware of that, and most likely, also it can give you a time to actually get out early, which I never do because of the fact that my levels of stop loss are there for a reason. It's there because price will have broken structure to either side and my trade will become invalid. Now, a lot of people use the SMAs to actually get out of their trades early. Like, let's say, for example, your trade is not going in your favor and the SMAs actually switch against you, then most likely you are going to lose that trade, right? But you can actually get out early and save some money. So a lot of people like to do that. I don't do that because of the fact, like I said, that my support and resistance is there. My stop loss is there for a reason, and it is there, because if market structure actually breaks, then at that point, I don't want to be involved anymore, right? So my trade will be invalid. There's no reason for you to actually have hope in a trade that it's invalid. There's a reason that you get into a trade, and there's a reason that you get out of a trade, right? You have your reasons to get into a trade. Guess what? As soon as your reason starts fading, like, oh shit, my sells look better than the buys that I'm in, that means that you get out. So the reason that my stop loss is where it is because that means that my sells, if I'm in buys and my stop loss gets hit, that means that my sells are looking better than the buys that I just got in. So at that point, my trade is invalid, so I don't want to be in it anymore. And then that's when you close in your loss and you go and see what you did wrong, or actually give your trade a second chance if you get faked out. Because a lot of times, yes, you can get faked out. This week is a little bit rough, but we did end up finishing the week with a banger. However, it can help you. Very, very, it's a little bit more advanced, but I recommend it, like using it as a psychological level. And for me, in my way that I use my SMAs, is that it actually makes me feel better about my trade. So I get in my trade because I have most of my trades are break and retest, right? Or fake outs, like how I like to say it, like if it's not sells, it's buys. So you get into the bias. So most of my trades that I like to get in are not based off the SMAs, but the SMAs give me peace of mind because I know that if the SMAs are in my favor, most likely I'm going to win my trade. And then when I win my trade, I know that the SMAs, as long as they're holding and we're trading above it or below it, then as long as those SMAs are holding, I'm good to stay in my trade. But as soon as price most likely reverses or there's a tide shift, I know that the SMAs are going to be against me in that trade. And when that does happen, that's for me, time to get out. Skirt, I'm out. You know, you close your profits, you're out for the day. And you know, if that was your first trade and you won and you made your 1-to-1, 1-to-2, you know, and then price ended up coming back to break even, but you secured, call it a day. Simple. You come back tomorrow. But anyways, guys, this recording will actually be posted on YouTube, and it's a little free class that I'm giving for everybody, based on SMAs. I use it as a level of psychological support of resistance.